Greeting you, ladies and gentlemen. You are watching Daily Market Review with me, Slava Ismailova. Today, as usually, we are going to start our daily review with the first currency pair, Euro versus the US dollar. The 1.2869 intra-wave lower high will become the focus of attention following the probe above 1.2813. However, counter-trend euro strength will be limited to single print resistance at 1.291 and 1.2919 from last week's market profile, providing the maximum capacity for corrective upside risk. A setback below Monday's low at 1.2725 and support at 1.2702 would bring Friday's 4-month low at 1.2642 back into the picture. Weekly chart, Euro versus the US dollar trend is bearish. The next currency pair for today is US dollar versus the Japanese yen. Resistance at 79.46 is under threat as the corrective rally from Friday's low at 79 threatens to extend. However, corrective upside risk is expected to struggle with beneath resistance at 79.8. A setback below 79.22 would put renewed pressure on the 79 point low, and last week's weakness creates additional downside risk to the strong 78.25, 78.3 support area. Weekly chart, US dollar versus the Japanese yen trend is bearish. The next currency pair will be Great Britain pound versus the US dollar. The corrective recovery from Friday's 1.5733 low remains on course for congestive resistance between 1.59 and 1.5951. However, a sustained wave of Great Britain pound bull pressure above 1.5951 is required to increase the capacity for the counter-trend rally towards 1.6051. A setback below 1.578 would expose the 1.5733 low once more, threatening an extension to the powerful short-term downtrend towards 1.5635 and the important March 15 higher low reaction at 1.5599. Weekly chart, Great Britain pound versus the US dollar trend is bearish. The next currency pair for today will be US dollar versus the Swiss franc. The 0.9345 support area remains the near-term target, following the sharp setback of 0.95. Last week's bullish candle failed to sustain a breach above bull channel resistance, and Friday's 4-month high at 0.595 will become strangled on a clean break below 0.9345, exposing 0.9313 and 0.927. A recovery above 0.89438 is required to leave the 0.95 peak vulnerable. Weekly chart, US dollar versus the Swiss franc trend is bullish. And the last currency pair for today is Australian dollar versus the US dollar. A lateral period of consolidation keeps the action above Friday's 5-month low at 0.9795. However, while corrective upside risk is restricted by resistance at 0.997, the main threat remains to the downside. A fresh wave of Australian dollar bear pressure on the 0.9795 low would bring downside targets at 0.969 and 0.9663 into the spotlight, and the November 2011 low at 0.9663 lies close to a projected rising support line of a 10-month bull pennant continuation pattern at 0.961. Only a sustained break above 0.997 would leave the tone opening 1.002 and 1.0146. A weekly chart, Australian dollar versus the US dollar trend is bearish. You have watched Daily Market Review with me, Slava Ismailova. See further details on our site, grandcapital.net. As usual, I'm wishing you good trade and see you later.